Hello friends, welcome to Nirmal. I am Piyush Jain and today we are going to talk about economy. We saw the recent GST numbers. It has again, I would say once again, painted a strong growth trajectory. We have seen again almost 1.5 lakh crore plus GST numbers have been announced in June, around 1.69 lakh. We also saw robust numbers in April, strong numbers in May. So overall, again, the first quarter basically has already given us a strong start versus the last year. The growth numbers in GST versus the last year was about 12%, and when you compare that to the budget forecast of 10.5% nominal growth in the budget revenues, looks like we are almost maintaining the trajectory here. From the perspective of regional growth, South India, both Karnataka, Tamil Nadu, and other states have really shown some strong growth numbers. On the other side, we also actually are seeing some good start in the June for the monsoon. Uh, Usually, at this part or at this point of time, we always worry about how is the monsoon going to be, perhaps what is the impact going to be for the economy. But looks like it has spread out very, very fast. So now, when we are sitting at the start of the July and we are looking towards the second half of the year, the question perhaps in our mind is how sort of GDP growth, overall consumption growth, how it's going to look like, what perhaps could be the impact for the stocks, for the broader stock universe, for the economy. I think to understand all of that, we really need an expert, an economist who actually could explain us. And for that, let me actually welcome the industry veteran, Mr. Devendra Kumar Pant, the Chief Economist of India Ratings and Research. Sir, welcome to the show.
Thank you.
So let's start with the first one. And instead of GST, I'll actually first start with the monsoon, the feel good factor, which has been over the last 10, 12 days. Uh, at this point of time, at the start of the July, are you actually feeling happy with monsoon spreading out very fastly across India? It's too early to call right now. What's your sort of first takeaway from the monsoon pattern forecast and the broader spatial distribution so far?
Well, Piyush, everyone was worried when the onset of monsoon was delayed, and delay was somewhere closer to a week, and then post that the monsoon rains were not good. A part of it was due to the extreme weather pattern which developed over Arabian Sea, tropical joy. Now, that what it had done is it has given pre-monsoon rains to northwestern India. So basically Gujarat, Rajasthan, Delhi, Haryana, etc. They had seen significant amount of rains before monsoon actually hit these parts. Probably because of some of these adverse weather pattern which has been over various parts of the country. Uh, the monsoon covered in a week before than it should have been. Post that, as of now, the progress, if I leave aside first week, which was almost dry spell in the month of June, the progress has been relatively good. What we have to keep our finger crossed because the dreaded El Nino, which was developing, and it was only after July we'll see how this is going to evolve. But another point which for very important for Indian monsoon rains is how the Indian Ocean dipole is behaving. Unfortunately, we don't have latest information on Indian Ocean dipole, which is nothing but the temperature between east of India and west of India. So basically Arabian Sea and in the Bay of Bengal. And if this Indian Ocean dipole is strong, and we have seen in the past years, when it was an El Nino of the moderate to high intensity, a strong Indian Ocean dipole has helped us, and the monsoon rains were not that bad. Now that we have entered in the crucial month for the monsoon, and July we see the maximum rainfall, and that's the time where the harvest, the sowing, crop sowing for the Kharif crops takes place. It starts from the June, and by July it covers entire India. Then the sowing takes place. As far as sowing data is concerned, in case of paddy, we are still seeing the sowing is less than what the normal sowing pattern has been. So that's one cause of worry. But yes, if it is too early, if the July rain has been remains the way we had seen in the couple of days of July. And by end of July, we don't have significant deviation both over the space of over June and July and across various districts or meteorological subdivision. Then we may go look for a normal agriculture year. But right now, mood will be cautious optimism because till now it is better than what was initially expected a month back.
Right. So, continuing on that path, then what do you make out of the rural consumption growth or rural growth right now? Because we have conflicting data. One is actually we keep talking about the rural wages growth or unemployment. Like how really sort of how much that data has veracity? Like how much should we trust that data? And number two is from the perspective of the rural consumption or the Kharif crop. What's your sort of overall sense about the strength of the rural economy right now?
Look, the one indicator which, though it's not a rural account, it's an all India number, is which gives a confidence that the rural demand will be slightly better than what we initially thought of, is the way the inflation has declined. It was beyond anybody's expectation that inflation will come between 4 to 5%, and that too just in the beginning of the year. So what it does is we have seen the agri wages or rural wages, whether we say the agriculture wages or whether we see the non-agriculture wages in rural area, that has become positive in the real terms. So the wage growth minus inflation growth has turned positive, which has remained negative for large part of previous 2 years or the past couple of years. That gives a confidence that rural demand will be better than what we otherwise see. Now, if we look at the commentary which comes out from the FMCG companies post their quarterly numbers, because these are the people who are on ground, they know how the sales of their products are taking place in the rural, semi-urban, and urban areas. Now, again, conflicting signal. We have seen somewhere they have been very, very concerned. Some of them being okay kind. Some of them in wait and watch mode. So in totality, if I look at it, we have to draw conclusions from the different numbers because unfortunately we don't have rural urban income data. Only thing it comes when the base year of the economy changes, of the GDP changes, and unfortunately the latest rural urban income data we have at aggregate level that dates back to 2011-12 because the base revision which was supposed to take place because of COVID and other things hasn't taken place. One thing we have to be mindful of that. If you look over a period of time, no longer the agriculture is same as the rural. Because now if we see 2011-12 data, the non-agriculture income in rural areas is more than 2/3. So it's only 1/3 which is agri, and more than 2/3 is the non-agriculture. So that kind of, if we see that pattern, so some amount of services is also activities are also taking place in the rural area. So yeah, agri going down, not going very fast, will have an impact. But yes, we believe the situation will be better than what all of us has thought, say, a couple of months back. It will not be very great, but it will be better than what we had thought a couple of months back.
Okay, and from that perspective, when we actually move towards and we see the GST numbers, which were grabbing all the headlines, what it really tells you, because when I see GST, I normally think around that this is a consumption tax. It's a tax which is being sort of put at all the sources, whether you're delivering services, you're consuming some goods, or like wherever you're going or buying anything. So what it tells you, like one, obviously there is a sort of a better collection of tax, but broadly, is it telling you that the underlying current of the economic activity, is it very strong? If at the June quarter we are seeing some strength in the numbers or resilience in the numbers, are you expecting as you move towards the festive quarter, this trend is going to get stronger? Like uh, how you're deciphering it?
Well, because there are different ways how one looks at these GST numbers. Now, if I look at and try to look at this number, so first thing, if I look at just simply plain GST collection number, earlier what we were seeing, a large part of it was coming because of the inflation, because the prices were growing faster compared to the last year, and because of that, even with the lower volume, you may see a higher GST collection. Come first quarter, inflation has eased out. I'll say not totally in the RBI point of 4%, but it is still between 4 and 5%. So inflation is eased out. We haven't seen GST collection down, so this gives some confidence that real activity or the volume game is happening there. But if you look at this data and try to put it alongside IIP numbers, where we see that dismal consumer non-durable performance, we see that consumer durable performance very weak, that doesn't really count. The other thing, if you look at, say for example, automobile sales, look at how the four-wheeler sales have behaved and how the two-wheeler sales have behaved. So it is showing that the upper bracket or upper income bracket where are not hit that hard by all the disruptions in the economy, be it the COVID, be it commodity or the price hike or higher inflation. Whereas people at the bottom strata of the population, their mass consumption item by these income strata, people from these low strata, income strata, they have been hit. Now, the confidence which I get it, like the number going forward, is as I said earlier, like the real wages of people at the bottom of the pyramid, that turning positive. Now, that turning positive will give a lot of boost to the economy. It may individually, it may not be very significant, but when you sum it over a larger, whatever we may say, the 300, 500 million people in the lower and lower middle income group, that becomes a sizable mass, and that gives some confidence, especially if we are looking at how the budget number 10.5% GST collection growth, whether government will be able to achieve that. It's not only the your center, but even the states. But one issue we see, or one problem we see in the GST numbers is when the GST was implemented, all of us, because it's a destination-based tax, unlike the sales tax and all those, it was origin-based, where the producing state or the exporting states benefits, and the importing states were losing out by paying the CST, Central Sales Tax, which, contrary to the name, was accruing to the exporting states. The expectation was the consuming states like Kerala, etc., and all those which are importing a lot of products from rest of the country, they will benefit more. Till now, the data hasn't gave strength to that hypothesis that by GST the consuming state are going to be benefited. We continue to see industrially large states or industrially well developed states, they are getting more benefit. Leaving aside the smaller state where a number of 2 crore or 10 or 15 crore will make growth number going haywire. So that's one thing which we are still trying to grapple with, whether the GST collection can be taken as a proxy for how the economic activity in the economy are taking place.
So from that perspective, we talked about GST. We talked about the economy, monsoon. Want to actually shift to a very short-term phenomena. the banking liquidity. We know basically the RBI has already moved from a sort of comfortable liquidity position now to a tightening position. Of late, we have seen there has been tightening, and we have seen that the call rates have gone up. We have also seen sort of the crossing repo rates. Largely, the yields previously last month were cooling off. Now, basically, we are seeing a mild inching up. Are you seeing this is largely because of tax outflows, or you are seeing basically that there is a sort of gradual systemic liquidity tightening?
Yeah, it's a combination of number of things. Like you rightly said, as you look at liquidity is right now. So gone are the days with 8 lakh crore kind of surplus liquidity, and the call money rate tells you how the actually in that day the liquidity in the banking system has remained. And if you look at the RBA is more comfortable if the call money rate remains around repo rate. Uh, Going below repo rate gives you, if it breaches the LAF corridor, this means the liquidity is either very surplus and or very tight. So there are mix of things. The way the global credit markets have behaved, way the portfolio flows in India got dried up, and the overseas borrowing cost has gone up because of two things. A, the risk premium has gone up, the global rates have moved up, global liquidity has tightened. So that gives you story. Domestically, right, the tighter liquidity has started showing on how the interest rates are behaving, whether it's the borrowing cost or whether some of the market determined interest rate like call money rate, right, etc., etc. So yeah, liquidity condition has remained tight, and we believe even the way we situation we are in, the smaller entities, whether it's a corporate or whether it's the NBFCs or whether it's even the smaller banks, where those who don't have the strong balance sheet will continue to have face a challenge, and the rates will remain elevated, and that will translate into overall into the economy. But having said that, RBI is focused and rightly so, because inflation is and will always remain the risk number one. Because if you are able to take care of inflation, you will be able to take care half of the problem with any economy is facing. So as of now, we expect the RBI policy stance remaining where they are. Unlikely that repo rate will come down. They will continue to infuse and suck liquidity in the system, but rather than tax outflow and other things, again the number comes once in a month, end of the month, when Controller General of Accounts release the monthly number. There we see the central government surplus with the RBI increases, and that reflects on higher the central government surplus with RBI means the tighter liquidity condition.
Okay, so that was a great conversation on the economy. We got to know about the GST, how the real economy is doing, monsoon, perhaps, which is the biggest trigger factor if you look at the consumption stocks, and they have done really well. So that perhaps is a lead indicator for us, and we got some good insights from Mr. Pant. And also, we had a good brief check on the systemic liquidity, and that correlates to how basically the banking system is performing, and perhaps we could have some idea on how the credit growth is looking like. So that was a complete discussion. Mr. Pant, thanks a lot for coming on our show and giving us all the insights. And dear viewers, hope you enjoyed this show. It was a wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.